For more on the markets, we're going to cross to Nompumelelo Siziba at the Johannesburg Stock Exchange. Good afternoon, Nompumelelo. We're seeing these tech stocks dragging the US markets down for the second week.
Yes, that's right, Nzinga. Things are not looking good at the moment. The first quarter registered negative gains on equities globally. And of course, the most recent concerns are around tech counters, perhaps more regulation expected there. And of course, this trade war situation that's going on. We know that the US it initiated those steel and aluminium import tariffs, which were effective from the 23rd of March, if I'm not mistaken. And of course, China came out with a statement yesterday to say that it's imposing import tariffs on up to 128 US products. So that pretty much sounds like a war to me, because China has retaliated. And of course, markets in a real tiz about it. So those factors at the forefront of investors' minds. In terms of the all-share index today, we saw that the market did open in positive territory, but it's since joined other bourses in negative territory at the moment. Meanwhile, the local currency has been sort of up and down. Just up and down relative to the US dollar. The US dollar has weakened relative to other currencies, and this is on the back of woes around US policies and Mr. Trump's shenanigans and so on and so forth. But quite positively, SARS came out today and reported that it collected a net total revenue of just over 1.2 trillion rand. That's for the fiscal year 2017 to 2018. It's just 700 million shy of what it was seeking to achieve, or 0.06% of its target relative to what it collected in the 2016-2017 year. Maybe the bond market has reacted to that. Well, let's take a look at the indicators. I'm joined by Viv Govinda. He's from Rand Swiss. Thanks for joining us, sir.
Thanks for having me.
Good stuff. The first quarter, as I mentioned, for global equities was dismal. I think the all-share index was down by something like 6% or a bit more. So what's your expectation for the second quarter? You know, people are worried about their portfolios and their investments, and even ordinary people who think that they don't have money have their pensions invested in the stock market. What's your expectation for the second quarter?
Look, I think things are going to be more volatile going forward. It depends to the large extent what happens to interest rates. We've had some reasonably good economic numbers out of the US, and it's surprising we are seeing that you know, the market's pulling back as strongly as it is. But that being said, it's been quite strong for quite some time, the stock market in the US, and you know, hit quite a few highs last year. Locally as well, I mean, we have gotten a lot of good news, a lot of cheer at the end of last year, but you know, the rand has taken a bit of that away, especially from the resource sector, some foreign traded stocks. And the biggest stock in this market, Naspers, has been under huge pressure over the last few months, and that's obviously really hurt us, forgetting, of course, about the Steinhoff situation and those kind of surrounding fears. Going forward, I do think if we do see interest rates, you know, rise as anticipated, we will see markets under pressure, just because that's the normal mathematics behind the situation. High interest rates means greater discounting to future earnings, and therefore you'll find current prices being, you know, under pressure. We have to see locally some kind of improvement in actual economic performance, which we haven't seen just yet. And if we can do that, then hopefully we can see, you know, things returning to a more positive tone.
And then I mentioned this trade war scenario. It looks like it's on. The US has, you know, shot the first salvo, and now China has retaliated. The US is going to come out later this week with more, with a list of more import tariffs on Chinese technology companies. So what does this mean in practice, and can we expect, from an emerging markets point of view, for those of us who produce commodities, is it going to be negative for commodities? I
think it probably will be negative for commodities. Look, the US has reacted. The Chinese reacted symbolically, not, you know, in any kind of way commensurate with the amount of tariffs they got from the US. So that US did 60 billion goods on the tariff, China did 3 billion. You're talking about a big differential there. So they haven't really, like, reacted to things up. Now, the US could take this as a sign that, China is weak and afraid and maybe drag things up a bit more. Or they could say, okay, they haven't done this yet. Politically, it's been big news, and so let's see what we can do around it, And it depends to a large extent as to what the future impact is. Right now, it does seem to be like that China has really responded in March, and the European Union, for instance, has been excluded from a lot of the stuff in terms of exemptions, and so as much of, North America and, places like Australia, etc. So it remains to be seen just how far the US wants to take this thing. Look, nobody doubts, not even I think Donald Trump doubts, that if you have a full-on trade war, everybody suffers, including the US. But that being said, if you can pressurize the other guy into doing things, by imposing some tariffs on these goods, you could end up in a better situation than you were in the past. But this is a bit of a cliff edge kind of thing. You don't want to go too far off it, otherwise you'll fall over. But the closer you get to it, you can get benefits in the short term.
You touched on Naspers. During the first quarter, it lost value to the tune of about 15%. We know and we reported that it managed to get a cash windfall of 116 billion rand or something. Do you think by making the right investments, it will be able to turn around its fortunes and we might see the value of it go up? Because it's gone down quite dramatically.
Look, Naspers itself depends on Tencent's value, right? And where I would put it to you is this. This wasn't an investment. This was a lotto win. You basically, it's like investing at Facebook, investing at, Amazon at the start. You can't expect to make a business model trying to win lottos, And Naspers, to a certain extent, I think, is trying to do that. They've gone out and said, okay, we've got this massive, I mean, we're talking about huge, thousands of percent return on the initial investment that they put in, which is the kind of return you get for a lotto ticket. Not even playing roulette, you wouldn't get this return. So they've gotten this win, and it accounts for the majority, if not all, the value of Naspers at the moment. In fact, there's a massive discount to Naspers' total value just versus their holding in Tencent. And now they've gone at the sort of part of it, and the idea is that they're going to go out and basically pay down debt and acquire other things, hoping to mimic this lotto win again. So I don't think this is a possibility. I don't think that they have proven in any way that they were anything beyond lucky by doing the initial investment. They were lucky, they bought the thing, and they didn't sell it afterwards. That's what their big choices were there. And so that is one thing. The second thing is that what does Tencent look like going forward? The company has come out with some, the results that weren't particularly positive. So we haven't seen this Naspers falling. We've seen Tencent falling and Naspers reacting to it. We've also seen the currency under, a bit stronger than it was like a few months ago. And that's obviously, again, you hold an offshore asset, your currency gets stronger, that diminishes as well. So there's a number of factors being affected. And of course, you talked about that raising as well. You flood this market with new shares. And that basically decreases, or increases supply, which obviously drops prices as well in the short term. Going forward, I do think that Tencent is a valuable company, but there's risks involved that we have to be aware of. China has been, changing quite dramatically, and I'm advocating, and I've been advocating for a while now, that what's happening in China politically is by far the most important political events in the world. Dwarfs Trump, dwarfs Brexit, all that kind of stuff we talked about, and it remains to be seen just how the environment there suits a company like Tencent. In one hand, it protects them. It's unlikely that this is going to allow more competition from outside, like Facebook and Google, to enter the market. On the other hand, you might just see more, clamping down on some of these internet, services, some more chats happening online, etc. So that is the big case, I think, that's going to have Tencent going forward, and therefore affect Naspers as well.
Indeed. Well, unfortunately, we've run out of time, so we're going to leave it there. Thank you so much, Viv. That was Viv Govinda. He's a portfolio manager at Rand Swiss. After a short break, Nzinga has more business news for you.